It is Money Monday. With the Supreme Court striking down the student loan relief plan and wiping out more than $400 billion in student loan forgiveness, nearly 43 million borrowers are now grappling with payback issues.
ABC News business reporter Alexis Christoforous is here to help break this all down for us. So let's just start at the very beginning. Who does this affect? And what does this mean for them?
So as you said, 43 million people who have federal student loans who would have been able to have them forgiven under the Biden plan will now have to start repaying them come the fall. So come September 1, interest will start to accrue on these loans. October is when you have to start to repay. And this is really going to be a shock for a lot of people's household budgets, right? They haven't had to make these payments in 3 years. And if you graduated during the pandemic, this is the first time you've had to deal with repaying. Now, the good news is President Biden has something called a 12-month on-ramp period. So in the first 12 months, if you miss a payment, you will not be in default. They will not send it to the collection agency. It won't ding your credit report. That buys you a little bit of time. Also, you want to take a look at other payment options, which I know we're going to go into, but also second chances. President Biden is looking at something called the Higher Education Act. He wants to try to give people the ability to wipe out their loans using that act. That would give the Department of Education the ability to waive your loan or to compromise your loan. It's going to be challenged in the courts and probably won't happen, if it does happen, until after the presidential election. So you should just move forward saying, you know what? This payment is going to be due in October.
All right, you touched on it. Let's talk about those repayment plans. What are the options?
So there are several options, and it literally pays to go out there and seek these out and see if you're eligible. So we wanted to highlight a few. There's something called a standard payment plan. Everybody gets one of these. It's all of your payments are broken up into even amounts over 10 years. There's a graduated plan. So you start out with low payments. Every 2 years, those payments get higher. There's also an income-driven repayment plan. This is very popular, and there are several of them. And President Biden actually made this plan a lot more generous after the Supreme Court decision. So now, if you're a low-income borrower, your monthly payment cannot be more than 5% of your discretionary income. So that's income after all the essentials like rent and utilities. Also, if you have $12,000 in loans or less, after 10 years, whatever debt is left will be wiped out. And then finally, there's the extended payment plan. Just like what it says, you get more time to pay, but interest will also continue to accrue. So remember, the more time it takes to pay off a loan, the more interest over the life of that loan, and that's something to consider.
Well, let's be real about this too, though, because a lot of people are struggling right now. Inflation, everything costs more money. If you feel like you really just can't afford these payments, what do you do?
Look, first off, make every effort you can to pay them, because that's in your best interest. So pretend like you owe those payments now. Start putting money aside now in a high-yield savings account. Make a little money on your money while you wait for those payments to kick in. But there are other options if you're truly struggling. Two we want to talk about here: deferment and forbearance. Both of them are going to temporarily freeze your payments, but there's a major difference. With forbearance, you have a little bit less time, and also interest continues to accrue while those payments are frozen. So general rule of thumb, if you qualify for deferment, that's the better path. If you don't and you're still struggling financially, then forbearance is the way to go. You can always also, if you have more than one federal student loan, you can consolidate them into one loan for hopefully better terms, but you might not get all the perks that go along with a federal loan, so that's something to consider.
Let's talk about private loans. I just finally, after 20 years, paid off my private loans there. I know that is a good round of applause right there, but the rules are different when it comes to the private companies.
It is, unfortunately. So all the things we've been talking about do not apply if you have a private student loan. If you do, though, you can always try to refinance that loan as you would with any private loan to try to get a better interest rate. That's challenging, though, now, because interest rates have been on the rise. You can also reach out directly to your lender, see if they have any cancellation programs, forgiveness programs. They're not obligated to do it, but you can always make your case. Bankruptcy should always be a last resort. It can be difficult and it can be costly, but it is an option. So you want to talk to your bank or financial advisor about it. And finally, just negotiate with your lender. I always say it doesn't cost anything to negotiate. You're not going to be any worse off than you are now. And the worst thing they'll say is no.
Alexis, it's always good to see you. We love Money Monday.
Well, hey there, GMA fans. Robin Roberts here. Thanks for checking out our YouTube channel. Lots of great stuff here. So go on, click the subscribe button right over here to get more of awesome videos and content from GMA every day, anytime. We thank you for watching, and we'll see you in the morning on GMA.